Back with closing trades right here in ETNOW, getting a little bit weak at that 81,575 thereabout mark for the Sensex, the Nifty as well scaling lower, although there has been a little bit of an uptick which has definitely come in. But let's welcome on board Sunil Subramaniam and find out what are his thoughts on the equity market. Sunil, hi afternoon, done with the earnings season. We've made it to the fourth largest economy, beat Japan as well, and in certain parts of the country it's been a very early arrival of monsoon as well for the longest time since 2009. What else is going to push the markets higher from here?
Well, RBI's dividend and then the expectation of a rate cut. They already bought whatever 5-6 lakhs crores of liquidity pumped in by the RBI. But with this government receiving this money and spending it, that money is going to flow through the system. And monsoon means that rural consumption will be up on track. Also, the fact that I think that we'll get some good news on the BTA front fairly soon. At least part one of the BTA, I think details will come out. So there are enough good news waiting in the wings for the markets to new fresh highs. There will be volatility because news flows always come both ways. International scenario is still not very comforting. But I think that overall, if you take, say, 3 months outlook, even internationally, my own read is that Mr. Trump will be signing the BTAs with a number of countries. Maybe China will take longer. But I would say that this uncertainty that's currently prevailing is probably a good time to buy, because to me, domestic liquidity is strong. And all the good news that you're getting will mean that I see flows into mutual funds and all that strengthening over the next couple of months. So I think liquidity driven market. So basically, to look at it from that perspective, obviously domestic oriented sectors will be a top pick. But I'm saying that for those willing to take a little bit of risk, the tariff related sectors are probably now a good buy starting from now, because like I said, the news of a good BTA is not yet there in a lot of prices.
Right, but Sunil, tariff-related sectors, help us highlight some, because when this news flow related to tariff did kick in, it was the overall markets that fell. Along with that, the export-related counters were hammered the most. But which are the sectors that you should be watching out for crucially?
So if you look at it from the tariff perspective, I think that where we'll walk away with the wins will be in labor-oriented sectors. So meat, textiles, chemicals, leather goods. These are the areas where I expect Indian government to drive a hard bargain, because employment generation is key for India. So I think these are the sectors will come out winners. IT, for example, I was a bit negative on IT a few months ago, but now that I see that there's an oversold section of IT. If you take 6 months as a good way to look at it, because 6 months ago is when the FIs started selling. And the Nifty has been roughly flattish. I think about 2% is a 6-month return. IT is down 14%. So
All right, so let's watch out for some labor-oriented sectors, case in point being textile, leather, and some of the manufacturing plays. And other than that, IT, wherein Sunil was actually holding a bit of a negative outlook, now is turning a bit bullish. Sunil, is that correct?
Yes, that's correct. I was a bit negative on IT because of all the negative news around the US growth and all that. But I think it's been a bit overdone. It's been a 16% underperformance to the Nifty over a 6-month period. And I think that's a bit overdone. And I think it's a good time to start buying, because definitely when the BTA news comes out, IT will be something that the government will push for. Not that there's a threat on BTA, but clearly IT as an export oriented was getting impacted by all of this. So I think it's a good time to start buying IT on dips. And like I mentioned, the other sectors being labor-oriented, being especially I like pharma too, I like chemicals, and I like leather and textiles and all of those things. So while there is a tendency to prefer safety in terms of domestic sectors, like, and there again, I think consumer durables, again, I think have relatively underperformed over the last 6 months. So that's again a good pick for me, because I think the good monsoon, rate cuts and all of that, that's a sector should get a good boost in the coming months.
Shivangi, what's your reading on the charts for IT? It's been a stark underperformer pretty much since last year, and especially since January, when all the tariff talk got a little bit heightened and the repercussions of it on the US economy. But do you sense IT could be in for a rebound? So we've seen that, of course, IT space has been one of the stocks where we have seen that there has been some sort of recovery, but they haven't really sustained well at the higher levels. But of course, there are some pockets which have outperformed, and I believe there should be some wait and watch in this entire space for it to again revive and again gain strength. Okay, that's the take coming in on the Nifty IT. So far this year, it's lost almost about 13.5%. But sources tell ET now that US team is expected to visit India in the coming weeks, and it will have the next round of talks on first tranche of India-US BTA. We also learned that India-US are looking at an interim trade deal before July 9th. Sumita Karir, my colleague, is here with more details.
Right, so a team from the US is expected to visit India in coming weeks, and that's essentially what sources are telling ETNOW. The team is expected to have the next round of talks on the first tranche of negotiating a bilateral trade deal with India. Remember, India and US are looking at an interim trade deal before July 9th. This is essentially when a temporary suspension on steep US tariffs that runs out, and India is seeking an exemption on reciprocal tariffs on domestic goods. Remember, India also remains protective of several sectors, including agriculture and dairy products. Remember, Trump gave a 90-day tariff reprieve on reciprocal tariffs, so that is about to end in July, and India is expecting to crack a deal before that because you do have the baseline 10% tariff rate that is still continuing, so India is expecting and hoping for that to get lifted as well. This is coming in the backdrop of an Indian team visiting the United States for negotiations that was led by Chief Negotiator Rajesh Agarwal, where he held talks with his US counterparts. And in a diplomatic nudge, the Commerce and Industry Minister Piyush Goyal also visited the United States and met with US Commerce Secretary Howard Lutnick to negotiate that trade agreement. In fact, he also stated that both sides are committed to enhancing opportunities for our businesses and people. Remember, India and the United States are aiming to conclude the first tranche of the BTA by October 2025. Given the fact that US is India's largest trading partner, both sides are also looking at doubling bilateral trade by 2030 to $500 billion.
All right, thank you so much, Samita, for getting us all those details. Definitely, we'll watch out for that. But Sunil, I specifically wanted to have your take on the chemical basket, because of late, that theme is picking up. And what we hear from the management till date from this earnings that we have been tracking, they are constructive on the growth outlook for FY26, and some are even highlighting that the margins can expand marginally from these levels. But since it's a vast sector, any particular pocket within the chemical space that is looking good to you?
Specialty chemicals, agrochemicals, given the good monsoon, right? If you include a broader baskets of pesticides and fertilizers there, I think that's good. And pharma synthetics APIs that, the fact that China is a big player there means that there is an overhang on the sector. The same opportunity is also there. So I think I'm also reasonably bullish on the overall chemicals pack.
So being bullish on the chemical pack, and just to highlight that Tata Chemicals, RT Industries within the chemical basket, these are one of the top movers in the FNO side as well. But the top stock that is leading within the FNO basket is Container Corporation, almost a 4% jump coming in on this counter. Sunil, I'm not sure whether you track this counter very actively, but just a couple of days back, the management did connect with us, though after a very disappointing set in Q4, they're still optimistic that they should be able to clock 24 to 25% margin, as well as their EXIM business is expected to pick up. Give us your sense that how do you see Concor, if at all it's an active coverage list, or your overall sectoral view?
I can give an overall sectoral view because I don't track those individual stocks at all. So from an overall sectoral view, I think that the main thing which was harming this sector was the negative guidance that they were generally giving. And I think that's now giving way to some positivity. So I think because of that overhang, I think these are good places to get into. Because I do think that overall, even in the earnings season, I would say there's been a pessimism about the future because of the tariff overhang. And I am reasonably confident that in the coming earnings quarters, the companies will be able to beat the earnings guidance that they have given, because they have been pessimistic. So I think to that extent, there is an upward bias in terms of the stock prices, which will move up. And I think broader as a sector, I think this is something that we have to keep it in our radar.
All right, so that's the day coming in on Concor. But with this, let's quickly hear out from the management itself what they really told us on the growth outlook going ahead.
Looking forward for FY26, we see a very good growth in EXIM as well as domestic segments, because EXIM, the import exports are stabilized, and in last Q4 also we saw 12% growth in EXIM in fact, and in this running quarter also we are seeing double-digit growth in EXIM. So we are quite sure that this growth trends will continue for this financial year, and I will like to give guidance of 10% on EXIM growth for FY26. Now talking about domestic, of course Q4 was not very good and due to various reasons, and now in FY26 we are now quite optimistic that we will be able to do quite well in domestic. Transportation of bulk cement, transportation of ceramic tiles, then food grains. These will be basic commodities that we will be moving in a big way in this FY. And I will like to give guidance of 20% growth in domestic in FY26. So overall guidance will be 13% for the company, EXIM and domestic combined for FY26.
Expiry? Which is also perhaps under pressure today is BSE. Remember, the SEBI has issued a final framework on equity derivatives expiry days. There's been a lot of flip-flop on that, and exchanges are now allowed to expiry on either Tuesday or on Thursday, and exchanges must seek approval to change current expiry day. Ankur Mishra, my colleague, is here with more details on this notification.
Market regulator SEBI has issued final circular on F&O expiry days, and it has maintained Tuesday and Thursday as expiry days in the week. Remember, there was a draft circular which was issued by SEBI earlier on expiry days, in which a similar suggestion of days was made, but this happened after NSE had earlier declared that it will shift its expiry from Thursday to Monday, and after that market regulator came into action, saying only 2 days can be chosen in the week, either Tuesday or Thursday, and NSE had to pause its plan of shifting its expiry. But we understand through sources that NSE will apply to regulator shifting its expiry from Thursday to Tuesday, and this will be made as per the final circular guidelines, which enables any exchange to approach the regulator with the change of expiry days till 15th of June. So we understand that application will be given to the regulator, but this matter has already been discussed in the Secondary Market Advisory Committee, in which indication was already made. Scenarios were discussed that what happens if the two exchanges decided to swap its expiry days, but for now the status quo remains for expiry days. So Tuesday remains for BSE and Thursday remains for NSE, but an option has been given to the exchanges to approach regulator on changing the expiry days, and it will depend on regulator to approve that application or not.
Okay, that's the take coming in right now on which day expiry is going to be locked in by the exchanges. So far, of course, we are yet to hear from the exchanges. But Sunil, now that the earnings season is pretty much behind us, what's been your assessment on where you saw positive surprises and where you still think there's value?
Like I said, for me, IT, though the guidance was poor, I see value because of its underperformance. I think banks' numbers have been good. They've been very positive, but I see value in the public sector banking space. Those private sector, I think the numbers have been good. The outlook is also good, but more or less in the price. I think public sector banks, they're still not reflective in the price yet. So there's value in the public sector bank packet that I see. Consumer discretionary numbers were disappointing, but again, I see value there because the full growth potential is probably not discounted in the current price. So these are the big pockets in my view. If you have a slightly longer term perspective, then the broader infrastructure, building materials, cement, EPC contractors, that space comes into play because there has been a reasonable amount of correction there. It's not going to bounce back in a hurry. So you've got to have a slightly longish outlook there for you to start accumulating there.
All right, Sunil, but within consumer discretionary, the theme that you have been highlighting, give us some sense that which are the pockets that are looking interesting to you?
To me, the realty sector looks very attractive. For me, though, immediately because of the monsoon, as you know, construction takes a slight down. So you don't expect an immediate number seen. But I think that the leverage of the 1 lakh crore tax giveaway with an RBI rate cut leading along with the liquidity in the system to EMI cuts, the biggest leverage will happen in the real estate sector, because that's where a small amount of an EMI cut will lead to a large amount of a housing loan that you can take. So that leads the pack. Auto leads the pack partly because also the agricultural related tractor related sector should do well. Rural consumption boost will see two-wheelers and entry-level cars do well. So auto is a second pick within the consumer discretionary pack. The summer for the consumer durables like air conditioning and refrigerators, summer was hot, but the rains have come in early. So we'll have to wait for the numbers to see how those actually the durables come up. But with the festival season coming through from Ganesh Chaturthi onwards, I see again durables picking up. So to me, consumer durables will come in with a little of a lag. But those are the three within the consumption space, the three sectors that I'm looking at.
All right, well, yes, the early onset of the monsoon, Sunil, I guess is weighing heavy on the cooling segment as well, because we were just chatting today with the management of Symphony, and they also highlighted the fact that there is some tepidness in terms of the demand. But thank you so much, Sunil, for taking the time out and speaking with us this afternoon. Really appreciate that. All right, just a few minutes left for the markets to shut shop, and let's